I was asked to make this presentation to give a street level view. So this is supposed to be a practitioner's perspective of it, not a public policy perspective. And I was asked to do this in the context of what Engro has been doing recently. So I'll tell you from our point of view what we see. Sorry, keep on saying we. 27 years of habit dies hard. But from a private company's perspective, what the immediate challenges are, and at the same time, where do we see the opportunities? Where does private sector see the opportunities, and what are the key triggers, the drivers of the economy going forward, on which we can build a future? Okay, so just to give you the context of my remarks. What we have been doing last 4 years, Engro has invested $1.9 billion. It's happened in a number of different industries, and yes, that also included IBP, and I'll comment on what Kamal was talking about. This is almost certainly the most investment in such a short period of time ever done by a Pakistani company, and this was happening mostly right through an economic crisis, which goes to show the economic opportunities which are available in this economy. As a result, the company went from 13 billion of revenues to 115 billion of revenues, assets from 14 to 183 billion. So, tons of opportunity in the economy. But now let's talk about, and I'll share with you what happened to some of these investments, and which ones are doing well, and which ones are not doing well, and why it happened. First issue, access to capital. This does not apply to big companies like Engro. Companies like Engro have the ability to go out and borrow whenever they want. But the private sector of Pakistan, the small and medium business, has been crowded out incredibly. Some of the data is just staggering. For example, last year, the total term borrowing, long-term borrowing by the entire private sector of Pakistan, from the smallest firm, shop level, all the way up to the biggest company operating in Pakistan, including all MNCs, the net new long-term borrowing was negative. That's just staggering for an entire country. 93% of all incremental borrowing is the state itself. All of the borrowing which is taking place is short-term borrowing, is working capital finance. But more significantly, as I mentioned, we have had 4 successive years where the nominal debt outstanding to the small and medium sector has fallen. 4 straight years of nominal decline. So in real terms, you can imagine what the decline would be because at the same period we've had double-digit inflation. Now, some of that is the reduction in demand because of the energy sector problems that we look at. That has clearly had a significant impact. But that's not the only thing. Banks are making rational choices. They have the ability to plonk virtually all the incremental lending capacity that they have in absolutely secure government paper and get returns. By the way, on the lending that they're doing for the circular debt, Kamal will be happy to know that the cost of borrowing of government of Pakistan is higher than what Engro borrows at. So the cost of funding is not as cheap as you would think. And you see the other data here. I won't talk about each one of them, but they all tell the same story. Energy crisis, we talked about. I think I may disagree with some of the analysis that Kamal presented, but I completely agree with the 2 areas that he's talked about as the crux of the crisis: the regulatory regime that we have and the fuel choices we have made. And in my opinion, the 2 are linked. The poor fuel choices are the result of the poor regulatory structure that we have. And my principal criticism of it is one of the aspects that Kamal talked about, and that is the lack of competitiveness. There is no return to innovation or efficiency at all. I'll just give you an example of 2 IPPs done under the same policy at the same time. One was based on furnace oil. Had to begin with a capital cost which was greater than the second one, ran overtime on both the implementation time and the cost, delivered electricity in the end at 24 cents a kilowatt hours incremental cost. and was given a higher rate of return by the regulator versus a project which was done from energy which was being flared in the air for 12 years by the state, which is supposed to be looking after the national interest. For 12 years, gas was being flared from the Kadirpur field, and we just physically happened to see what was happening and driving past it, and we put a power plant on it. 220 megawatts coming from zero incremental energy costs. The lowest capital cost to begin with, the only one done within the time and lower than the original cost. The incremental cost to the economy in reality is about 1.5 cents, and the rate of return given by the regulator was less than the first project. So we have to completely revisit the regulatory regime, and until we do that, we will not fix the problems. Fuel choice, just a quick comment, is such a massive issue. Right now, we are accumulating circular debt at a rate of ₹1 billion a day. So it's somewhere between 370 to 400 billion rupees a year. Just one change, just one solitary change. The plants which are running on furnace oil, about 50% of that capacity is in the public sector, 50% is in the private sector, total adding up to about 5,000 megawatts. We've done machine by machine analysis. Which one can be converted, which one cannot, including how the coal will get there, where the conveyors will go from, how many engines have to be added, all that detailed out. The annual savings from that revamp and conversion to coal is more than 400 billion rupees a year. The total investment, approximately less than 400 billion. 10 months payoff. Without increasing any electricity price, you could finish circular debt with just one decision alone, which is revamp and move to imported coal. And this is not even dependent on but anyway, the disaster that is on the gas. What we have done is just absolutely staggering. For 4 years, we're going around in circles, and we can't make gas imports happen. Why? Because the ministries within the same government are at loggerheads with each other, and there is nobody who can walk into the room and get a decision taken. We abandoned Marshall. We had no legal basis for doing it. As a result, we couldn't even say it's abandoned. Then for 2 years, we kept on trying to find a way to go around that Marshall project. I'm sorry, I don't have the time to go into that detail. If anybody's interested, I can tell you. When anybody could have told you on day one, this is never going to happen. After wasting another 2 years, they've now come to the conclusion that I can't do that. And now they're trying to find a third way around. In the meantime, you've gone from being essentially break-even on gas to shortages which in summer are 400 to 500 MSCFD, going up to more than 1 billion MSCFD in winter. But all of this, to me, the key is it comes from institutional decay. The decision-making machinery is just simply broken. The institutional capacity is not there. And I can take you through very, very specific examples. And by the way, I can speak for an hour where I will talk about institutional decay without using a word of mine. And the only people that I will quote are federal ministers of the government and the bureaucracy which is in control right now. I'll just use their word. I'm just coming from the National Management College this morning, and I was asked to review. They were doing a public sector enterprise restructuring presentation. You should have heard the words that they were using about what that system is. I won't use such harsh words. So anyway, the system is broken, and until we address this issue of institutional decay, one very, very specific reason why we are sitting today with an investment to GDP ratio which is the lowest in half a century. It's collapsed, it's harmed in the last 4 years, our investment to GDP ratio. One of the principal reasons of that is egregious, across the board, wholesale default on contractual legal obligation for the government of Pakistan, virtually never done before. But having said all of this, I still believe that this economy can be a really exciting place to work and invest. It's got some fundamentals which are just impossible to ignore. The first is the consumer base. I can go into so many different metrics, and whichever way you want to look at it. Look at the size of the mobile phone market, look at the milk market. For Pepsi, Pakistan is one of the 10 biggest growth centers of the world, and so on and so forth. There is this huge consumer base which provides many opportunities for growth. And if you look at our businesses, the businesses that Engro has invested in itself, the one which has grown the fastest, because this is the one which is least dependent on government policy, and most directly addresses that opportunity of the consumer base there. The company launched in 2006 with a revenue of 1.5 billion, hit 30 billion of revenues last year, will inshallah cross 40 billion this year. And this, I just use this as one example. This story is replicated again and again. So one of the great triggers for this economy is and should be the consumer. Second one are resources, and there are large areas of mineral resources. Coal, I just talked about that as an example again because Engro is involved in this. Third coal, 175 billion tons of coal. I mean, the one block was given to us. There's a lot of skepticism. I don't know who spreads these stories, but there's a lot of talk about no, the coal is not there, no, it's bad quality, no, it can't be done. We've had engaged the best global experts that they are. We had the Chinese and the Germans who are both the global leaders in lignite technology get involved in this. The best experts in the world have done the work. The social assessment, environmental assessment, economic assessment, technical assessments are all done. That one block of coal, of third coal, which is 1% of the total inferred reserves, just 1%, will give you 4,200 megawatts for 60 years. That's the size of that potential. You can do coal to chemicals. We are involved with the Chinese on that one also. There's phenomenal opportunity sitting there. Copper in Balochistan is another massive opportunity, and there are others. Energy, I'm not going to go into each one of this. Pakistan is one of the best locations for solar in the world. We've got great wind corridors. We've got fantastic hydro capacity. So a number of those. But the third trigger is location, and that goes back to the discussion that was taking place in the previous session. And that is the historical positioning of Pakistan. We are the heart of the Silk Route, and that's what we need to position ourselves for. For doing that, we have to obviously revisit both our domestic politics and our foreign policy, and our view of national security. And change the national security paradigm where the citizen is at the center and the heart of that strategy, rather than regional ambitions and hallucinations that we have suffered from time to time. Sitting right next to 2.5 billion people whose economy is growing faster than anybody else in the world is just too massive an opportunity to ignore. Both of these countries, China and India, are also energy starved, and we are sitting between these two countries and some of the biggest energy reserves in the world. So just if you look at the energy corridor and the opportunities that opens up, it's a massive opportunity. And obviously from a business perspective, from my perspective, for heaven's sakes, for resources and markets, the world went into colonization, and that's how strong a driving force markets are. And I've got this market right next door to me, with whom I have significant cultural overlap. And it's 1.3 billion. It's growing. I mean, as a businessman, I celebrate at the opportunity. And I'm sorry, I heard a lot about this big Indian fear, and they'll come and dominate us. Maybe we are naive, but if Wasim Akram can take on Sachin Tendulkar, I believe Engro Foods can take on Amol and beat him also. So let's not work out of insecurities and fear. Let's have confidence in ourselves, and let's make out to be a part of it.